Good morning. Good morning.
Morning, Professor.
Good morning.
Good morning.
Good morning.
So let's get right into it. So the final exam. Okay, so this will represent 15% of your final grade. Okay. So it's worth 150 points. So to put that in perspective, right, your homework has been worth 10 points, kind of building up. The midterms were each individually worth 80 points. Your participation week to week has been accumulating about 10 points every session that you attended. So this is 15% of your grade. There's going to be 50 multiple choice questions. You will have 2 hours to finish the exam. So it will be a timed exam, and you'll have 2 hours from the time you start to finish the exam. The exam will be administered through my accounting lab. No, it is an unproctored exam. So you have the freedom to you have a window of time to when you can take the exam. So the exam's going to open up on Wednesday, May 20th, and then you can complete the exam either on Wednesday or on Thursday through May 21st. So we received some guidance. So as you know, the way final exams work, right? We all have a window of time when we can when we have our students take the final, and it's different from our normal class schedule. So we received some guidance from our faculty association in terms of how to manage that in this environment. And the feedback was that we can open up the exam for up to 48 hours, okay? But it has to be completed on the day that the exam was supposed to be taken. Okay, so our exam was scheduled to happen on Thursday, May 21st. So I'm opening it up on Wednesday so that you have the flexibility, if you choose to take the exam earlier. But it does have to be completed by Thursday, May 21st. The whole concept here is that they didn't want all of your instructors at the same time saying, okay, everyone, take the exam on Monday and let's just be done with it, right? That's unfair to you as a student. So unfortunately, we're scheduled for Thursday. I would have loved to get it out the way so that I can get to the grading. So that's that. And then with that concept in mind, that I would have had to be on campus on Thursday, May 21st, between 9:30 and 11:30, watching you all take the final exam in person. I will be on ConferZoom on Thursday, May 21st. I'm going to log in at 10 a.m. and I'm going to stick around to about 11:30 a.m. So if you're planning to keep that same exam schedule, right, log in at 9:30, 9:45 and start taking the exam, you can log into ConferZoom to ask me a question if you need to clarify a question on the exam. Okay, so that'll be when I'll be sitting at my desk, prepared to answer any questions you all have. Let's see. Those are the logistics. So let me know if you have any let me answer any questions you have.
So that's going to be next week, right?
Yes.
Will we have class next Tuesday then, or no class on Tuesday?
There'll be no class on Tuesday.
Okay, for sure.
What other questions do you have? So this is a comprehensive. Is that what it's called? What's the word? Comprehensive. Yeah. This is a comprehensive final, meaning that you're going to be. It's going to include questions from the entirety of the semester. Obviously, we talked about a lot of things, and there's no way that I can put all that into a final, or I guess it is, but man, that would not be fair. Thank you, Chris. Cumulative. I think that was the word I was actually looking for. I want to go through what will be on the exam. So if you go to Canvas, you should see under, I believe it's other course material. Let me look at student view. So there's a module toward the bottom of the home page called Other Course Material. And at the very bottom, I should probably move that to the top, there is a page there called Final Exam Topics. So if you want to open up that, or you can follow along in your notes. But this is the document that you should see here. And actually, before I get into that, let me just go back real quick. Let's talk about the topics. So like I said, at this point, you should have a sense of what you need to get on the final exam in order to achieve your goal, whether it's passing the class or whether it's getting an A in the class or B in the class. So you'll see that about 32% of the exam is focused on basically chapter 1, chapter 2, the accounting equation. Okay. So familiarizing yourself with what type of account is this and where does it belong? So when we talk about cash, what type of account is cash?
Asset.
It's an asset. And assets belong on the
Balance sheet.
balance sheet. Okay. If a company owes a vendor for services provided, what type of account is that?
Accounts payable.
Accounts payable. And accounts payable is what type of account?
A liability.
Liability. If a company buys a vehicle, what type of account? What account is that?
Equipment.
Equipment, sure.
Asset.
And it's in an asset. What type of asset?
Long term.
Long-term asset. in addition to knowing the what type of account it is, you also want to know what the normal balance is. So what that means by normal balance. So if we're talking about accounts payable, what's the normal balance for accounts payable?
A credit.
It's a credit. What's the normal balance for what other account did we say? Equipment.
Debit.
Debit, yeah.
Debit, right? So if any asset would be the normal balance is a
Debit.
debit. Any contra asset, the normal balance is a
Credit.
credit. We talked about what contra assets did we talk about?
Accumulated depreciation.
Accumulated depreciation's one.
Allowance for doubtful accounts one.
Allowance for doubtful accounts, that's another one. If it's a liability, what's the normal account balance?
Credit.
Credit. And if it's a contra liability, no, there's no contra liabilities on this test. But if it is a contra liability, it would be a debit. If it's assets, liabilities, revenue account, normal balance is a
Credit.
credit. If it's an expense, normal balance is a
Debit.
debit. If it's capital,
I actually have a question about that.
if it's a capital, normal balance is a
Credit.
credit. If it's dividends, normal balance is a
Debit.
Debit.
debit. Okay. Did someone say they had a question?
Yes, I did. I forgot. I remember we added gains and losses into the accounting equation. They're temporary, right?
Those are temporary accounts. Yes.
Okay, yeah. So the only permanent accounts we have are assets, liabilities, and capital.
Assets, contra assets, liabilities, contra liabilities, capital. Yes.
Okay.
Is there such a thing as like closing out gains and losses accounts? Or is that
Yes.
just part of like revenue and expenses?
So yeah, there is a such thing as closing out gains and losses, and you do have to close them out. You close them out similar to how you close out revenue and expense accounts. So one way to think about it, I mean, really, is you've got revenue and gains. Those are credits. You have expenses and losses. Those are debits. So it's you breaking it out is similar to you breaking out current assets and long-term assets, right? And so they're both assets, but depending on the nature and intended use, you either record it as a current asset or a long-term asset. With revenue and gains, they're both increasing your net income. It's just a matter of, does it increase it as part of your operations, or does it increase it as part of your non-operating activities? And then T account. Okay, so we're talking about debits and credits, and using T accounts are extremely, extremely helpful. Even today, when I'm working through an issue for one of my clients, and I'm trying to think through how to treat this transaction, I will sit down with a piece of scratch paper and start writing out T accounts, and because it's helpful to illustrate what's happening with your debits and your credits and within each account. So make sure that you want to be comfortable with using T accounts, because a lot of the questions lend itself to the use of a T account to make it easier to answer.
I had a question in regards to like long-term assets. So can you normally depreciate every long-term asset? Is that how you would kind of look at identifying whether something is a long-term asset or short-term?
About land.
So no, you would depreciate any tangible long-term asset, with the exception of land.
Okay.
If it's an intangible long-term asset, which I don't think we spent a lot of time on, things like patents and copyrights, those get amortized, which is just another way of saying depreciation. But then you also have long-term investments, right? And so those wouldn't get depreciated. Depending on the type of investment, it gets recorded either at fair value or gets recorded at, if it's the equity method, you're keeping track of the company's gains and losses. So there's lots of different types of long-term assets. The only ones that we're depreciating are the ones that we plan to use over a long period of time. And as we're using it, right, we bought it in 1 year and we're going to use it for the next 6 or 7 years. So we're just recording the cost of using that asset over the next 6 years.
Okay, thank you.
All right, and so then the other piece that you want to be comfortable with, we're still here in the accounting equation, is transaction analysis, right? Writing journal entries. So there's a good amount of questions about, here's the transaction, you're going to debit this account and credit what? Here's the transaction, what accounts do you debit and credit? So it's questions like that. So you want to make sure you're comfortable with answering those 4 questions when you're doing transaction analysis. See if can I remember the 4 questions? Come on, guys. Nobody knows the 4 questions. What accounts are being affected? What type of account is it? Asset, liability? Is the account going up or down?
Do assets still equal liabilities plus owner's equity?
And do my debits equal my credits, or do assets equal liabilities plus owner's equity? Thank you. I need to help starting it. Once I start it, I can finish it. Let's just start it.
Find it.
So that's 32% of the test. Let's see, what questions do you have?
All of these topics are right here are on that module section, the final exam topics, yeah?
Yes.
Is there gonna be like a review that we can do on my accounting lab to just review and prepare for the final exam, like all the other midterms?
Yes. There will be. All right. So On a scale of 1 to 10, 10 being the highest, how good do you feel about this section?
By section, do you mean the final review or the last few chapters that we reviewed?
Oh, assets equals liabilities plus owner's equity.
Oh,
How good do you feel about acing 32% of the exam? Okay, just waiting for a few more people to post their response. All right, 5 more seconds for the 7 of you, for the 6 of you. All right, this is what I expected. Nope, it's not. Well, all right. Take what I can get. I expected more 9s and 10s. What else you guys want to talk about on this section?
I think, like, for me personally, a lot of this is just the fact that I need to go back and review it on my own, you know, and just kind of do my own studying because it's been so long since we've gone through those chapters. I don't know if that's maybe what's influencing the poll. It's kind of one of those things where I don't really know what questions to ask. I just need to go do a bunch of practice problems.
Truth.
I'm in that same boat.
Got it. Okay. So let's talk about the next section, which is the 4 financial statements. Okay. So this is about 22% of the exam, right? So if you add in accounting equation, you guys are 8 and 9, and then your financial statements, right? That's 50% of the test, right? So you're at a solid F just by knowing these 2 things. Okay. So let's talk about it. What are the 4 basic financial statements?
Cash flow statement.
Statement of
Balance
cash flow.
sheet.
I think you said
Income
balance
statement.
sheet. Income statement.
Retained earnings.
Statement of retained earnings. Wonderful, beautiful, wonderful. Okay. So you also want to know what's the purpose of each one of these statements. And what I mean by that is, as an investor, as a creditor, why would you go and look at one of these statements? What information are you expecting to get by looking at one of these statements? Okay. So if you're an investor, why would you look at the balance? What is the balance sheet going to tell you?
If the company is healthy.
Yes. I know what healthy means.
How well they're doing.
Can you be a little more specific when you say healthy?
I think it shows their allocation of resources between assets and liabilities, right? You can kind of break down where their capital is invested.
Yes. Anyone else?
Tells you how well the company is doing.
Again, how well, I think that might be too general. Because actually, I'm not sure it tells you how well the company's doing. Because it tells you what the company has. I don't know if you guys know who MC Hammer is. He's that's from my generation. Side note, I met MC Hammer back in the 90s. It was 91 actually. And I challenged him to a dance contest. I used to be a really good dancer. Challenged him to a dance contest. And I want to say he was too scared, but he laughed in my face and said, Right on, man. And kept it pushing. But anyway,
I don't know if you wanted that challenge.
no, I think no, I could have. I felt I really like in '91. I could have took that dude. I think. No, I think I could have took him. So if we looked at MC Hammer in '91, right, and looked at his looked at his balance sheet, right, that would say how well is he doing? He had a lot of money, right? He had a lot of assets. But what we have to look at is, okay, but what's your spending habits, right? How fast are you going through these assets that you have, right? So it's not necessarily, you don't just see the health or the wealth, how well a company is doing just by looking at what's on its balance sheet. That just tells you where they sit right now and what they have, but it's not the indicator of what's going to happen, what's happening and what's going to happen in the future. So what financial statement would tell us what's happening in the future?
The cash flows.
That's an indicator. The use of cash. What else? What other statement?
Statement of retained earnings.
No.
The balance sheet.
No, we're talking about the balance sheet. Which one tells you how well a company is performing?
Income statement.
Absolutely, the income statement.
So wait, is the balance sheet like what the company has and like what they owe because of their liabilities, or?
Yes. The balance sheet shows you what resources do they have, okay, and what commitments do they have to pay.
So the balance sheet pretty much shows their debt ratio, right? Like what level of debt they are in relation to what level of assets they own.
Yes. That's right. So when a company comes out and they go, we're a company, we want you to invest in us, we want you to loan us money because this is what we do. Okay. We sell socks. We fix cars. We we fly planes, right? We lease out rooms for people, right? This is what we do, right? And we go to the income statement to see, well, how good are you at doing what you do, right? How much revenue can you generate from renting out a hotel room? What does it cost you to rent out that hotel room? And what are all your other costs associated with renting that out? That tells me if your business is profitable or not, okay? Which you can then start to extrapolate. If they can continue to do this, then their cash is going to continue to go up, and they can take that cash and use that cash to buy more assets, whether it's investments or whether it's buying a new hotel building so that they can increase their profits over the long run, right? So it starts with looking at that income statement, because that's telling you the performance of the company. Are they good at doing what they do?
So you could have a company with a good income statement and a bad balance sheet, or vice versa.
You can have a company with a good income statement and a bad balance sheet. Yes. And you can have a company with a good balance sheet and a bad income statement. Yes. Dropbox. Losing money, but they have a ton of capital because companies, investors are investing in them because they believe that they have a product that once they can get the economies of scale, get enough people, enough customers, that it will be profitable, right? So they have a strong balance sheet. I'm assuming, I haven't looked at Dropbox's balance sheet, but they have a strong balance sheet, even though they're showing losses year after year.
Gotcha. So just super risky for investors, but probably would pay off pretty well if it worked.
Correct. So you want to be comfortable with the purpose of it, of the each financial statement. You also want to be comfortable with the content, right? So we go back to this: assets equals liabilities plus capital plus revenue minus expenses minus dividends. How do those components separate themselves onto each of the different financial statements? You also want to know what periods are covered. And what I mean by that is when you're looking at a income statement, you're looking at a period of time. This is how well we've done from January 1st to March 31st, or from January 1st to December 31st, showing you a whole year's worth of activity. Same thing for the statement of cash flow. This is where we spent our cash from January 1st to December 31st. Same thing for the statement of retained earnings. This is what we started with on January 1st. This is how much we've generated in income throughout the year. This is how much we've paid in dividends throughout the year. This is what our ending balance of retained earnings is at the end of the year. The only financial statement that's different is the balance sheet, because the balance sheet showing you a point in time. Okay? It's saying on this specific date, December 31st, on this specific date, March 31st, this is what we had in assets, liabilities, capital, and retained earnings. Lastly, on the balance sheet, you also want to be familiar with how to categorize assets and liabilities as either a current asset or a non-current asset or long-term asset. Current liabilities versus non-current liabilities. What questions do you have about this section, the financial statements?
What chapter did we do the statement of owner's equity?
We talked about it in chapter 10, but I think most of the questions here are coming from chapter 1, chapter 2.
Okay, thanks.
Okay, here's another one. So on a scale of 1 to 10, 10 being the highest, how good do you feel about this section on the 4 financial statements? Okay, maybe 5 more seconds. Give the last few of you a chance to participate. Okay, so we had 9s and 8s, and now we've got 8s and 9s ruling the day. Okay, I'll take that. I'll take that. I'll take that. All right, so again, I mean, that's 54% of the exam. And we really haven't ventured much further out of chapters 1 and 2. Another 16% is on the accrual basis of accounting, right? And the accrual basis of accounting says record revenue when earned, record expenses when used. Okay. And so you want to know, when do I get to record revenue? And I know I geeked out on you guys a couple weeks ago, and we start talking about the 5 steps of revenue recognition and the new accounting rules. You don't need to know any of that. Okay. All you need to know is I record revenue when I earn it, and I earn it when I do it. Okay. That's basically what all that fancy stuff says, is when I do it, I earn it. You also should familiarize yourself with the adjusting journal entries. So if you recall, back in chapter 3, there were, and I told you that was one of the most difficult concepts of the class. And I know now you're looking back on it, and you're like, man, it's nothing compared to amortizing a bond discount. But at the time, it was like earth-shattering, like, stuff for you guys. So the 5 different adjusting journal entries are prepaid expenses, supplies. There's accrued expenses. There's unearned revenue. There's accrued revenue. So think interest revenue or accounts receivable. And then there's depreciation. Okay. So you want to know, if I'm recording a journal entry, what accounts do I need in order to record this adjusting journal entry? Okay.
Can you repeat the adjusting entries one more time for me, please?
I can, or someone else can.
So far, I got prepaid expenses, supplies, accrued expenses, accrued revenue, and then I think you said there were 2 more or 1 more.
It was accounts receivable, unearned revenue, accrued expenses.
Yeah. And then did you say depreciation was one of those?
Yeah.
Okay. I got them. Thank you.
I think she was saying thank you to whoever that was talking. She wasn't saying
No
thank
problem.
You. There was not a question on income taxes, so you can take that off. Don't worry about that. I couldn't find it. I wanted to ask a question. I couldn't find it. This huge mass of questions I had to select from. But there is a question on interest revenue, calculating how much interest you've earned. And so the 2 things to keep in mind when you're calculating your interest is that number 1, the percentage is an annual percentage rate. Okay, so it's showing you how much interest you would earn over the entire year, entire 12 months. The other thing is to remember, how many months am I accruing for, right? So when was the last time I got paid interest, and how much interest have I earned by the time I get to the point when I need to record my adjusting journal entries? And that's 16%. So let's do some math. You got the 32 plus the 22 plus the 16.
16, 11 plus 8.
That's 70. That's 70% of the test right there.
$35 questions.
Yeah. What questions do you have so that you can feel comfortable with this section?
So essentially, each question is going to be worth 3 points.
Yes.
Okay.
All right, here we go. Poll, confidence poll. On a scale of 1 to 10, how good do you feel about the accrual method? Okay. There's one more. All right. And let's see how you all ended up. Higher than I anticipated. Good. Good. We're still in the well, now we're at the 8 and 7. Okay. So we're at the 8 and 7. Sweet, sweet. Questions? What can I do to help take you from a 7 to an 8? Nothing. Nothing. You've done everything you could. You did a great job.
I think practicing once you open up my accounting lab review, just practicing it a little more. It's kind of been a minute since we really focused on that topic.
I see, says the blind man. All right. Hopefully you'll appreciate this. 12% of the exam is on ratios. And the good thing about ratios is they're formula driven. So all you have to do is know, how do I calculate quick ratio? How do I calculate days in receivable? And if you have that written down on a piece of paper, then you don't have to memorize it. The only thing you just need to understand is, okay, what is a current asset, which we talked about up here? Or what is accounts receivable, which we talked about up here? Okay. Where can I find sales, which we talked about up here? The other thing that you want to be familiar with is, what are each one of these ratios telling you, right? So it's not just about, remember, accounting is the language of business. So it's not just about putting out words and letters. It's about making those words and letters help someone understand, right? Communicating something to someone else with that information. So we've got, well, let's just walk through it. What does the quick ratio tell you?
Liquidity.
It tells you liquidity. Liquidity meaning?
How fast can you convert your assets into cash?
Yes. Okay. Does anybody speak Spanish on this call?
Somewhat. Yeah.
So it'd be like, no way, it'd be like me asking you, what does Balar mean? And then you telling me what Balar means, but explaining it to me in Spanish. So like, what does Balar mean? And just explain it to me in Spanish.
Like bailar, like dance, bailar?
Yeah, what does that mean? What does Balar mean? But to answer it in Spanish.
Moverse al ritmo de la música con una pareja o solamente.
You see how I'm still confused? Right. So when you're saying like things like what does this mean? We want to get out of our accounting terminology, and like the term I like to use is put it where the goats can get it, right? You want to say, right, you want to explain it like if you're talking about the quick ratio, it's what's a company's ability to pay the money they owe with some of their assets that can quickly be converted into cash. What about days in receivables?
It's how quickly you receive cash from your accounts receivables.
From your customers. Yep. What about the current ratio?
How well they would do if ever they don't receive any money for like a year.
Yeah. Yes. So it's kind of like the quick ratio, except it's not as specific. You're just looking at your total current assets over your total current liabilities, recognizing that some of those current assets can't be used to pay off current liabilities, right? For example, prepaid expenses. And also recognizing that some of your current assets, like inventory, it's going to take some time for that to actually convert into cash, because you have to sell it first, and then you have to wait for the customer to pay you based off your days and receivables. What does the debt ratio tell you?
Assets over liabilities. Wait, no, or is it the other way around?
How fast you can pay off debt?
The debt ratio is the percentage of assets acquired from debt.
Yes. So all those are good answers. I like Madison's the best. It's how much of your assets did you acquire through debt? What about the inventory turnover? What does that tell you?
How long your inventory sits in the inventory until it gets either sold or moved on, I guess.
Mm-hmm. If Apple has a inventory turnover of 60 days, does that bother you?
No.
If Jack in the Box has an inventory turnover of 60 days, does that bother you?
Yeah.
Yes, right. So that inventory turnover is relative to the industry that you're in, and how quickly is your product becoming obsolete. And gross profit.
Revenue minus cost of goods sold is the formula.
Income before taxes and overhead.
Okay. Anybody else?
Excess of sales revenue over a business's cost of goods sold.
Okay. So it's telling you, so all those are good answers. It's telling you how much of every dollar of sales, how much of that dollar are you keeping that can then be used to pay all of your operating expenses?
So that haven't been subtracted from the sales revenue yet. Right?
Yes. So how much of your revenue, like how much money are you making off of each sale before you get into all your other operating expenses? If I can buy a pair of shoes for $20 and sell them for $80, then my gross profit is $60. And then I still have other expenses like my website, my shipping costs, my marketing, taxes, employees that I have to pay to help with the shipping. I have all those other costs associated with it. But off top, I'm making $60 off of each sell that I make.
What was days and receivables again? I'm sorry, that one went.
The formula or what it
I have the formula, but I just wanted to know like what it meant.
so basically how quickly cash is coming in.
Thank you.
What was the current ratio again?
If you have enough assets to cover your liabilities.
All right, so if I do the math, right, we had 32%. Everyone felt pretty good about that, and 22%. People felt good about that, and then 16%. You guys felt that's 70%, and then if we add in this 12%, man, that's 82%. That's knocking out a B. So, let me know where your confidence is on ratios. Just those 6 ratios.
I think the thing that might get me on this is moving the decimal point over however many times they want it.
Madison, do you like have a document of like all the ratios written out, or like where did you find like all of like the formulas?
So I've been getting them from the book.
Oh, okay.
And then it tells you, like, right after it gives you the definition of what it is, it tells you, like, what it means too.
So just so you know, in chapter 12, page 699 and page 700 is a list of all the ratios.
All right, what was that page number again? I need
699, 699, 700. This is probably the best page in this entire book. Yeah, these are the 2 best pages in this entire book. All right. Oh, polls up. Polls ended. There we go. Look at that. Got some 10s, some 9s, a lot of 8s. Yeah. And so the more confident you feel in this section, right, you can rely on your confidence here to kind of help offset your lack of confidence in other areas. So let's see here. We talked about ratios, and then we've got specific topics, right? So we talked about a lot of different things in this class. These are the 1, 2, 3. There's actually 6, although there's only 5 on here. 6 topics that you're going to be tested on. The first one is on uncollectible account expense using the percent of sales method. Another one is on the inventory costing methods. That's using FIFO and LIFO. I don't think there's a question on about weighted average on there. And then the equity investments without significant, when the equity investments, when the investee does not have significant influence. Okay? In other words, the available for sale securities and trading securities. Depreciation. All right, and again, with depreciation, you want to make sure that you're being mindful of the dates that you're being asked to account for depreciation expense or accumulated depreciation, because the formulas that we have give us depreciation expense for an entire year, for an entire 12 months. And then asset disposals. So when you're when you're getting rid of an asset, and the 4 steps to get rid of an asset, getting the asset off the books and the contra asset off the books, recording cash if there's any cash, and recording the difference as a gain or loss. And then the 6th one that's not on there is treasury stock. Treasury stock. So on these specific topics, what's your confidence level? Okay. All right. It's nice to see no one's selecting 1. Okay. So 7s and 8s, a couple 10s, a couple 5s. So here's the thing for, this is 16%, right? And it's all 6 topics, right? So that means there's probably 1 question, maybe 2 on these topics. So again, it's about allocating your resources, right? And your time is your resource. So how much time are you going to put toward asset disposals? If you don't understand asset disposals by now, man, just go in and be like, I'm a guess on that question, right? I mean, allocate your resources back to this 32% area, right? This 22% area, this 16% area. And these are things at this point, either you know, you feel real good about, you just need to brush up on a few things. But, you know, if you've nailed all this other stuff, then yeah, sure. Get into this. And then the other topics, okay, closing entries, internal controls, and then, God help me, knowing the purpose of this entire class. What's the purpose of financial reporting?
Let investors and creditors know how well or how badly a company's doing.
Yes. Yes. Providing useful information to investors and creditors. And that's it. Questions? Bless you.
Thank you.
Okay.
Do you remember what chapter the closing entries were in again? Just off the top of your head?
I do. It's in chapter 3.
Okay, thank you.
You're welcome. All right. So
Chapter was asset disposal and treasury stock in again?
asset disposals in chapter 7, and treasury stock is in chapter 10.
Okay.
And as I said that, I'm embarrassed. I'm not embarrassed. I'm disappointed that I've converted that stuff to my memory. I feel like there's other things I could convert to memory. Like I'm watching The Last Dance and the stuff that I forgot that I should have remembered. Anyway, all right. So here are the, Madison, here are the questions that I recommend you work on. These are all available on my accounting lab in something called final exam prep assignment or something like that. Oh, it's just going by itself.
Holy. Bro, it just keeps going.
Oh, there you go.
Boom.
So this is not intended for you to sit down and complete everything within an hour, right? That's not a good way to study for this. I would get the problem. I would get the problem. I'd get my notebook and I'd go back to that part of my notebook, and I wouldn't be completing the problem just to complete it. I'd be completing it to understand how does this relate to what I have written in my notes, and really use these problems as an opportunity to make sure that you understand your notes and the information that you've been gathering.
And just to